We have got a brand new Bitcoin, all-time high, $125,750. We have moved down since then, but fortunately enough, this is what we saw happening in my previous analysis. This is why we got into a short position, and we are now currently in profit on that short position. So as you can see here on the chart, $125,750, that is a brand new all-time high for Bitcoin. Within the next hour or so from that breakout, we did break back down again. Now we saw this might happen, right? And we saw that this might happen because of the leverage in the market. So earlier in the day, this morning, we noticed there was an imbalance between leverage long positions and leverage short positions in the market. And that was my primary reason for getting short into this position, right? So that is a 0.8 BTC position, a 20x leverage position. We are currently up $750 on that trade. Earlier in the day, or earlier in the evening, I should say, that was up to a profit of $1,000 plus. But sticking to the plan, we didn't want to just snatch at profits, right? As I explained in the last breakdown of that trade, we were initially targeting, at least on a long-term basis, the $110,000 range, essentially a retracement of this last move up. There wasn't a lot of back and forth trading happening in this move. And we know that most of that was because of liquidations of short leverage in the market. And we wanted to play the reverse of that, because getting closer and closer to the all-time highs and further away from this low over the last couple of days, we saw an imbalance of leveraged long positions in the market. And as we know, when prices come down to meet the liquidation prices of those leveraged long positions, we enter into a situation where traders can get stopped out of those positions, or they can actually become liquidated in those positions, meaning they are forced to sell. When a trader is forced to sell, there is a surplus of supply on the market versus the demand. Increased supply, steady demand means prices come down. We can see here on CoinGlass, over the last 4 hours, there were $14 million worth of long positions liquidated from the market versus $7.2 million worth of short positions. Nothing particularly spectacular, but that is realization of the theory, basically. The fact that it was nothing particularly spectacular is why I'm choosing to move my stop loss. So if we get stopped out of this trade now, we will profit $450, which is perfectly fine, much better than a loss. And again, the reason I'm doing that is because although we got the move that we were looking for, it didn't occur in the way that we were looking for it to happen to satisfy the thesis for the trade. And indeed now, looking at the balance of leverage in the market, that has more or less balanced out. What we can see on a more granular basis is a difference in the shape of the charts, right? Essentially, there is a steeper gradient on the long side of the market than there is on the short side of the market, right? And that means that if price was to move an equal amount to the downside, we would see more longs liquidated than if price was to move an equal amount to the upside. If price was to move an equal amount to the upside, we would see a lower amount of leverage short positions liquidated. So there is, on a micro sense, more leverage longs in the market right now than leverage shorts, but nowhere near as much of an imbalance as there was when we got into this trade, and we didn't see massive liquidations go through. That's all I've got for you right now. As always, nothing I say should be considered financial advice, purely shared with you for entertainment purposes. But thank you so much for watching. There's plenty more to come. Catch you in the next one. Bye.